Okay, so let's move on to euro dollar. Again, if you have any questions, anything at all, please just shout out, yeah? Like I said, webinar is only useful to you if it's interactive, and not, if not it's really boring. Let's go to euro dollar right now. Okay, euro dollar on a weekly chart. Now, what does this look like to you? So remember how I analyze the markets, right? It's always categorizing what it's trying to do first before I jump in to do any trade plans. Oops, sorry. Okay, so if you look at this theory, price action theory, right? I always try to categorize which phase the market is in, which time frame I'm looking at, and then I'll dive in to plan something. Okay, but you need to know. Okay, you need to know which phase the market is in, whether it's uptrend, downtrend, or consolidation, and you also need to know what time frame you're looking at, and then from there manage your expectations in your trade plan. Okay, because in the consolidation on weekly chart, there's still many opportunities in between the consolidation in your 1 hour chart and your 4 hour chart and things like that. Okay, or in a downtrend in a weekly chart, there's also many other things that can happen in between on the 1 hour and 4 hour and 50-minute charts. So you need to know what you're looking at, what you're planning. Very important. Now, how do you know what phase the market is in? That's where you can use your support and resistance. You can use your price action, and to understand the markets. So price action, to me, I'm very big on price action. I mean, for those of you new to the webinar, this is not a webinar for theory, it's more for live market analysis. I believe I did a recording, I think November, October last year, whereby I covered an hour and a half of theory on price action and how to look at the market. So you might want to go back to that webinar. Okay, but for those who are new to price action, you might want to, not say you might want to, I would strongly urge you to be very good at it. Okay, to be very good at it because it's something that's very useful in terms of reading the markets on a technical perspective. Okay, so if you look at the weekly chart back to the live markets, euro dollar, Bimal, yes, it is a reverse from support. Support is about 105, and it is a big fat consolidation from 2015. 2 years of consolidation and more. Okay, now again, during the Age is a newspaper publication. I did a seminar for them in this November, I think. November or December, I can't remember. But anyway, they always ask for predictions, right? And people love predictions. I wonder why. But they're asking, I think the time was the Italian referendum, and they said that what will happen, with if the referendum go through, what happened in Europe, blah, blah, blah. So I did mention that near the 105 level was key to me. Okay, obviously back then we have not had these candles yet. It was somewhere here. Okay, so I say if 105 if we're able to break 105 cleanly, then clearly the bears are in charge, and I'm not surprised if we make a down move to parity from there in the next coming months. Okay, but this is what the market did. The market did break 105. I was bearish. Okay, I managed to take a few short-term short trades around here. But I also was planning a longer-term kind of trade plan all the way close to parity. But if you look at the weekly chart, right, you notice the next 1, 2, 3, 4 candles. You see the long shadows, and then what convinced me that this level might still hold and this might be just a false breakout is that this little long doji candle that closed above the 105. Okay, and if you look at the daily chart, okay, you can see that it was nice and bearish. Okay, there's no reason not to be bearish. But if you look at daily charts, even clearer. Look at the amount of touches in 1, 2, 3, 4. 4 touches in terms of support. You can call it triple bottom or quadruple bottom, but it seems very bottomish, and then it push higher, make higher low, and then push another high. Okay, now is that not to say that we might not visit parity this year? No, it's still possible. It's still possible, but right now not yet. Okay, right now not yet because it just pushed higher after that. So right now you can see the market still wants to consolidate a bit more, and there's not enough bearish momentum for it to push it down further. Okay, is it not enough bearish momentum to push it down further? Which is very interesting. I mean, if you talk about fundamentals, right? I mean, the USD has been so strong close to end of the year, but you notice that even its strength could not bring the euro down below 105. In fact, the thing just reversed. Okay, so if you look at the daily chart, it seems to be a bit more consolidating. If you look at the 4-hour chart, it's looking a bit more bullish, isn't it? Okay. Now, key thing to look out for the euro dollar is resistance at around the 10. I would say anywhere between 107.80 to 108. Okay, I'm staying away from the euro dollar because the move is not as clear to me right now. Okay, let me just delete some of the circles. Okay, so you can see that there's a bit of a, oops, sorry about that. It's a bit of a channel resistance here, see that? Okay, something like that. Okay, so this area here, this 107.80 to 108, for me is key resistance. If you're on top of euro dollar, and you can think of intraday kind of trades, meaning that trade within the channels, the support and resistance. So this level here, 107.80 seems to be a good resistance. Might want to take it down back to the 106.50. Okay, just within the channel. Okay, but again, more intraday stuff, because in terms of the daily and weekly chart, it's still rather mixed. Okay, because this was a nice trend, lower low, lower high, lower low, lower high, lower low, and then when the whole thing reversed, right now it's consolidating in some kind of pattern. Okay, I can't really decipher what kind of pattern yet, but it's consolidating. Okay, but what I know right now is that there's a resistance at around the 107.80 to 108. And what it might do potentially is it might form a inverse head and shoulder. Okay, so there's possible that the resistance might be respected, and intraday kind of trading, intraday to swing, it might come back to maybe 106 or so to form the inverse head and shoulders. Okay, but daily chart is one big fat consolidation. If you look at the 4-hour chart, you can see that it's trapped in this channel. Okay, possible shorting, short area or bearish area near the resistance at 107.80. Okay, well, first target, probably back to the bottom channel broken, then you might want to look at the right shoulder or the head and shoulders, which is around the 106, 105.50 to 106. Okay, Sunil, what do you say? Could it be a bearish flag on the high time frame? Which time frame is that, Sunil? Daily or weekly? Daily or weekly? Oh, bearish flag. Yeah. Sunil might be correct. It's a good spot. Sunil is saying that it's a bearish flag. Yeah, it's possible. Not the cleanest one though. Just because of this swing here and this swing here. So, yeah, I understand this is your flag, right? And this is the flag pole, isn't it? Okay, it's possible, but it's not the cleanest one. So I'm more inclined to think that this might be an inverse head and shoulder. Okay, but whatever it is, this level is still resistance. High chance that bears might come in and push it down at least to maybe the 106 or so. Okay, but longer term, not much direction. Bimal, you're saying that you enter on a daily pin bar. Long or short? I assume long. No, I assume short, yeah? Long. Which level was that? Where's the pin bar? I don't see any pin. This one? This one, 11 January? Extension. What's INEXT? Is it this pin bar? Or which pin bar are you talking about? Like, if you enter this long pin bar there, I think good for you. This was a decent entry. I stayed away because I didn't know what I wanted to do. Because I was more bearish, but then the thing just consolidated, so I just got stopped up. Okay. Yeah. So, which moving average do you use on your daily chart? That's a 10, 20, 50. 10, 20, 50. Nothing fancy. Just very common. I can trade without moving averages as well, but it's just this is 10, 20, 50. Okay. So that's the daily chart. So just take note of the different time frames and different analysis and ask yourself, what do you plan to do in terms of your trade plan? You want to trade intraday, swing trade, or long term, and then you look at the right charts. Okay, I'm covering as many charts as possible, hopefully not to confuse you, but to give you different outlooks so that you know what kind of trade plan you want to take. Okay. Jackson, hi Jackson, 10 and 50 EM, yeah, 10, 20, 50. Let me show it to you. There you go, 10, 20, 50. Okay. For those of you who are wondering what charting software I'm using the Pro Real Time software. They just updated the version last month, and I like it a lot. It's very nice to chart. Okay, so this is euro dollar. Yeah, gold I cover after all the FX. No problem, Jackson. Dollar Swiss. Okay, sure, dollar Swiss. Okay, let's go to dollar Swiss. All right. Daily chart. Let's start the weekly and see what's happening over there. Okay, weekly chart. Ooh, look at that. It came in. There's a lot of resistance around here, around the 103 or so, I'll say, for dollar Swiss. Support is all the way to 95 cents. And another level support is What level is this? Parity. Is it parity? Yeah, close to parity. Okay. So this is the dollar Swiss weekly chart. Seems a bit more sideways. Okay, but good spot, Bimo, because where we are right now is a key level, which is parity. Okay, you notice that most probably bulls will come in to at least maybe push it close to the previous high around 102 or so. And if you look at the daily chart, all right, you can see that this level is key. See this? Okay, I like this level. Thanks for pointing this out, Bimo. I might plan a trade after the webinar. But basically, if you look at this multiple levels of support here, okay, so it's stuck in a pennant, a descending one, and then right now it's reacting off this parity area. All right, I think it's a decent trade plan. I think if you take a buy position close to parity based on the support, strong support, it might come to at least test the close to the 101 level or so. Okay, but if you see the 4-hour chart, you can see that it's consolidating around this level. Not surprising. I'm sure I'm not the only one who can see that's parity. Here. Okay, so all kinds of support. Okay, so first target can be somewhere around this resistance here. If not, you can take higher levels of resistance. Yeah, but a decent enough trade plan based on the support level. Yep. But what I foresee dollar Swiss that it might make a push higher. I'm not sure whether they can go to previous high. But if you break out this descending pennant or descending wedge or whatever you call it, high chance that we might go all the way back to 102 or so in the next couple of weeks. Okay, but this level is key. Okay, if it breaks this level, right, then I'm going to stay on the sidelines for a while, see what happens. Okay, but for me, I think this level will be respected near the $1. All right. My chart software is pro real time. If you're IG client, you can go activate it under your preference. I think it costs about $60 a month. If you place more than 4 trades, the fee is waived off. Yes, pro real time. Okay, so that is dollar Swiss. Good looking chart. Thanks for bringing this up, Bimo. What else? Kiwi dollar, sure. Okay, here's Kiwi dollar for you. Okay, weekly chart wise, not the nicest looking chart. It went an uptrend here, consolidated, and then make a push higher. Resistance, it's around here. I'll see the couple level of resistance. One here, and around here, so 174. Okay, support is here. Okay, so I would say that the weekly chart looks a bit more consolidating right now. Okay, but we are at resistance, yeah, around the 72.50 or so. Let's go to daily chart. Okay, so daily chart, you can see that this nice reversal looks a bit like euro dollar, isn't it? I know some of you chart pattern fanatics will call it what, teacup and handle, and things like that. But more, I'm more focused on just support and resistance. So you see a resistance around the 72.50 or so. Okay, most probably it'll get reactive. The best will come in from here. Okay, I have no bias for daily or weekly chart because the price action is not clean enough. But there might be some intraday trades to take. So let me see whether I can draw something here. Okay, forget it. The daily chart and weekly chart is not clear enough to me for taking longer term buys. Just the way it moves, I'm not a big fan of it. But what I know is that there's a key resistance right now around the 72.30. And there might be a potential intraday kind of trade setup. Okay, so you can see that nice resistance, and you can draw a support trend line somewhere here. Okay, so what I like about this, let's see if there's any divergence. No, high, no divergence is actually a okay. So key level lookup for Sunil 7250. All right, if you want to be aggressive, you can take a aggressive short position based on the resistance here, and hopefully you'll break the trend line and consolidate back to the support level, maybe back to around the 71.50 or so. It's about 100 pips away. But if you want to be a bit more conservative, this support trend line, let it break through first, and then maybe it will come back consolidate around the 71.50, 71.40 level here. Okay, but this area here, 72.50, is definitely resistance, many touches. Okay, and the fact that it has been a bit it looks a bit overextended. Okay, it seems like you want to consolidate back to 71.50 before pushing higher. Yeah, exactly. Price a bit overextended. That's why I said the short side has higher probability. Is that your trade plan? Are you planning the same kind of trade plan that I'm looking at, Sunil? So it's possible that might consolidate back to 71.40 or so. Yep. This take note is more of an intraday kind of thing, because in terms of daily weekly chart, there's not much direction. Yeah, exactly. Yeah, so again, you got to know which time frame and what kind of trade you're planning, but the probability for the downside is much better. Upside, there's no trade at all. If you're bullish, there's no trade at all because it's not near support, it's too near resistance, no trade at all. But downside, yes, the risk to reward looks decent enough to take it. Okay, Bimil, can you show me example of daily, weekly clear signal to buy? Clear signal to buy or sell. When you say clear means what? On the indicator or you want to see a nice trending chart? Is that what you mean, Bimil? You just mentioned that it is not clear. On the Kiwi dollar you mean? Oh, so when you say clear signal to now when I said how I enter my trades, right? I don't wait for, especially when trade off support and resistance, my trading has evolved to whereby I don't really wait for confirmation. Alright, in the past year or so, I used to trade, by waiting for, let's say for example, this Kiwi dollar trade, right, that I'm discussing with Sunil. Is basically like, okay, I say that this is intraday kind of trade plan, resistance is here, it seems like it might want to come downwards. Now, if I want to take the trade to the short side, back to support level, okay, once I see some form of pattern like that, I'm more than happy to take the trade on the short side and put the stop loss above the candle. Okay, this is not that clear because this one is actually counter trend, so it's a bit more dangerous. But if the trend is sort of like consolidating for a long time, right? If it hits the resistance, I just draw my zones. Okay, so let me just draw my line. So I'm very clear that this whole level area here is resistance. See the touches here? Touches here, touch here, touch here, touch here. So I draw two lines because this is a day, 4 hour, or we can call it daily chart because I zoom out. And you can see that the resistance area, this is a whole zone area. Okay, so if I'm convinced enough that this is resistance and my risk to reward is good enough to take it, I'm more than happy to take it, stop loss above the high and take it down. Okay, so when I say I'm not clear about the direction, it's more towards the longer term time frame because ideally I would like price action to be nice and clear to the upside. So for example, something like here, you see here? You see this move here? This is a very nice price action move to the downside. See key support broken. It just keep making lower low, low high, lower low, low high. So this is the kind of move I'm looking out for. But would it happen all the time? Definitely not. Especially on a daily chart, it might happen only a couple of times in a year. Okay, but this is exactly what I'm looking out for. And where we are right now is seriously not clear at all. Okay, even this move here, right? I was leaning more towards the bear side because of this drop. But when the whole thing just shot up, yes, I did not take any trade when it shot up here. Okay, but I'm a bit more wary because the way the price action moves, I'm looking at a bit more consolidating more than anything else, especially for the daily and weekly chart. But if you ask me whether there are intraday opportunities here in between, inside these candles here on the upside, yeah, definitely. Definitely. Okay, so I'm just saying what's not clear is the trend on the high term time frame. That's what I mean. So which time frame you monitor for the long move? It depends. So for example, like Kiwi dollar, right? If I have no trade plan for the weekly and daily chart, then that's where I can zoom into 4-hour chart to the 1-hour chart and start planning trades from there. Okay. So it really depends on which time frame I'm looking at and which time frame will give me trades. Because I'm not the kind who will stick to one pair and keep trading it all the time. I like to look at a variety of pairs, maybe 20, 30 instruments, and then from there I pick the one that's easiest to trade. So if you ask me for Kiwi dollar right now, if I'm bearish, okay, even though I say that this is a high probability area to short, it's actually counter trend. Alright, so it might not be the nicest trade to take. I think there are many other charts out there that have nicer setups. Okay, does that answer the your question, Bimo? Okay, cool. So now a few charts that I pointed out, just wanted to show you because of the setups. Now, the first one was dollar yen. Okay, if you look at dollar yen, yep. If you look at the weekly chart, right? I'm already in this in terms of long side, but if you look at the weekly chart, okay, we might be consolidating something like this. Okay, this is just a so-called trend line, or you call it a consolidation wedge. I'm just drawing trend lines in the long term to see what might happen. Okay, so this might be the pattern that we might consolidate in for the whole of 2017. Possible. Okay, but if you zoom in a bit, there's no denying it that it is on a uptrend just by the bullishness of how it moved since December last year. Okay, because dollar was very strong, isn't it? Now, key thing is it came down to a support level near the 112.50 or so. Okay, so it's very bullish. It retraced. And if you look at the daily chart, okay, you can see that this level here, all right, there's quite a number of touches. Anywhere, if I zoom out a bit, right, if you see my line here at 112.50, can you just see 112.50 here? Let me delete some of the lines so it's clearer for you, sorry. Hold on, this, okay. So you see 112.50? Quite a number of touches here. In terms of support. And as well, if you draw a channel, you can see that this is a bullish flag, okay? So the first level here, I wasn't that convinced because it's the first time touching it. And then, of course, it was support if I zoom out, but I wasn't that convinced. It came up. Okay, my trade plan was that I wanted to break this channel resistance before taking it back to the previous high near the 118 level. Okay, but what happened was that it didn't break the channel and it came back, drifted back all the way downwards. Now this morning, what happened that it came back to the second, it did a second touch, or actually a third touch on the support level here, and around the 112.50. Okay, this level here, see? Anywhere between 112 to 112.50, I'm interested in terms of longer term kind of trade. So I was quite keen on this setup, and if you look at the 4-hour chart, okay, I'm not the only one that's looking at 112.50. Look at this bullish engulfing candle. Okay, so when it touched 112.50, okay, if you look at, let me just zoom in further, 1-hour chart. So it came down, it was a nice downtrend, yeah, lower high, lower low, consolidation again, lower high, lower low, lower high, lower low, lower high, and then it came down to second touch. Once I see a second touch here, okay, I actually zoom into the 15-minute, 5-minute chart. And once I see as a kind of double bottom forming, I was more happy to take it to the long side, okay, for a slightly swing kind of trade scenario. Because the risk is really tiny. What's my risk? My risk is just a lower low stop. That's it. And how much I'm risking and how much I'm targeting. It's a big, good risk to reward. At least 1:3 to 1:7 or maybe more even. Okay, but what I'm looking out for, if you go to like the 4-hour chart again, okay, is at least back to the resistance level here around the 114. That's almost about 150 pips or so. Okay, and now that the 4-hour candle has formed like that, I'm more convinced that it's possible that the bulls might take it up this level here. Okay, but I'm just showing you in terms of how I use different time frame to plan my trade, and basically how I use the lower term time frame to so-called confirm it, even though I know 112.50 was a key level. Yep, so dollar yen, possible move back to 114 in the next couple of days. Okay, but if it breaks this 114 convincingly, means might be a continuation of the bullish flag pattern, and we might touch the resistance around near the 117, 118 level again. But just take note. Okay, of course, if it breaks the 112.50, then we got to look at 112 and things like that. But right now, it seems to be a double bottom. Yep, just key thing to look at dollar yen. The other thing I wanted to point out to you is euro pound. Yep. Now euro pound, if you look at the daily chart, let me zoom out a bit for you. Okay, there's this little trend line here that's forming. Oops, sorry. Let me just get that away. Okay, there's this little trend line forming. So you can see that the weekly chart is still bullish. It's still bullish, but right now it seems that this level here, the resistance at 87 cents, it tried to break, but then the candle closed below. So this to me is a false breakout. This red candle here signals to me that the break above the 87 is actually a false breakout. If you go to the daily chart, okay, you can see that the market actually gap up. I can't remember what news on last Monday, I think. But you can see the whole thing just U-turn. Now what I think is that if the market can break below the 86 cents clearly, right? Now we're just 24 pips above the 86 cents. If the market can break below this level clearly, right? It might come back to this support trend line of about 85 or so. Okay, so if I go to the 4-hour chart, okay, can you see this? So for me, it needs to break this level clearly first, around 86. It tried to, but it's pushing back up because if it breaks this level clearly, then most probably the downtrend continue and might go to 85 because the 4-hour chart is a downtrend. You see, lower low, lower high, lower low, lower high, lower low, lower high. So as long as we keep this price action structure of a downtrend, then the bears might push it back down all to 85. If we break above the previous high, about 86, 60 or so, then the trade is not valid anymore. Okay. Sunil's question is, with the pound news today regarding the Article 50 ruling, what is your outlook? In terms of fundamental, I don't really follow much, Sunil. I mean, Theresa May might say this, might say that. I come to a point whereby I really want to focus purely on my technical and my strategy. If the news happen, of course I'm aware of when the news announcement is going to come out. I just avoid that period. Or if I'm in a trade, I just make sure I manage it properly. But in terms of predicting what will happen fundamentally, I stopped doing that. Not it's also because of myself. It's for my own psychology. Okay. Of course, you need to be mindful. You can't just be a pure technical trader and just ignore the news. You need to know what's happening, what time the news is being released, and things like that. Okay, but I'm not really a big fan of predictions. And I also don't want to give predictions to you because there's no point. I'll just follow the charts. It's so much easier. Yep. Bima, gold. Okay. Any other FX pairs before I move on to gold? It's actually 8 o'clock. Wow. Okay, I'm gonna move on to a quick chat on gold. I mean, what I can say is, Sunil, regarding the Article 50 ruling, if you look at any pound pairs, right, just you need to know levels. And the levels are more important than what she says or what the outcome is, because the levels will give you the sentiment of the traders out there. And then what you can do is basically just follow the sentiment or follow the trend. Okay, so you can see that pound dollar, for example, you can see that it has broken up above this little consolidation pattern. The key resistance that for me is broken is 12400. Okay, 12400. So let's say whatever Theresa May says, right, or whatever happened with the Article 50 and things like that, if it breaks back below 12400, then my bullish bias might change to neutral to bearish already. Right now it's a bit more bullish, I agree, just because of the breakout that is happening like that. But if the news causes to break back below 12400 and the candle closes below that, then I got to take a step back and reanalyze. Right, so that's how I see news. I see news as a catalyst or as a kind of what you call it, clue, okay, for me to know where the sentiment is, which is why I like news. News moves the market. Without news, it's just sideways. You know, like what's happening to S&P and things like that. Just sideways. There's not much news. But news move the market, and the good thing about news is that it gives me the idea of what the sentiment is, where the big players are, where the levels are. So that's what news helps in terms of the flow and liquidity. So I like news. But what I don't like news is whereby it messes up my trade sometimes. And it does happen. Definitely will happen. Alright, sometimes the most frustrating thing is you might jam your stop to break even. Because the price might hit the stop and then go back to your direction. Things like that always happen. So you just got to be psychologically there or psychologically stable enough to not be affected by such things, because that's just the nature of the markets. Yep. It's the same thing. I mean, if you guys watch football, right, you play soccer, right? Sometimes there are bad referee decisions. It's just part of the game. It's really just part of the game. Just got to accept it. So when it comes to news, know your levels. Okay, know where your key levels are, or I call it line in the sand. So pound dollar to me, line in the sand was around 124, and based on line in the sand, you can form bias after the move has happened, after the news. Okay. Oh, you're thinking of potential retest of support to go long. Yeah, 124 seems a good level of support. I can just take note of whether there's any news coming out, but 124 is a good support. Yes, Sunil. Jackson, so we use a different frequency to draw multiple resistance lines and determine whether there'll be a breakout for hours. Yeah, just, I mean, okay, which time frame looking at is very important. So the reason why I'm covering so many time frames is because I want to satisfy all the different traders in the webinar, okay? But for you, you need to know what kind of trader you are first. And then you can sort of use your time frames to plan your trade. So for example, if you're intraday trader, you can start looking at maybe the daily chart, 4-hour chart, and then you plan your trades on the 1 hour and 15-minute charts. If you are more of a swing trader, longer term, you can start looking at weekly charts, daily charts, and then plan your trades on the 4-hour charts. So it all depends on what you're looking at. And then after a while, you get a hang of it, and then you know which chart to look out for. Most of the times in the past, when I see a lot of traders, they have a lot of mismatched expectations because they're planning on a daily chart, but they're trading a 5-minute chart. So the 5-minute chart can do its own thing for a long, long time before it wants to agree the daily chart. So this kind of thing you need to iron out. Okay, but it's always good to, I mean, there's so many time frames for you to look at, just make use of it to, it's all about, for me, it's just like writing a story, isn't it? Just painting the scenario and then trying to see what happens. And trying to find the highest probability trade that gives you good risk to reward. That's about it. Yeah, because trading is all about probability. All about probability. Yep. Okay, let me just wrap up by talking about gold. Yeah, where's my gold? Gold. Okay, so gold's a bit tricky one. Look at the way it shot up. Phew, amazing. If you look at the weekly chart for gold, okay, weekly is still in downtrend simply because this is a lower low and this is a lower high. The reason why I say it's tricky, I expected 1200 to be respected because see this line I drew around the 1200 level, a lot of resistance there, support term resistance, but the thing just broke through it. Okay, if you look at the daily chart, okay, you can see a bit more clearly. Now, this 1200 level has been broken. Okay, but the next level of resistance that I drew is around the 1220. Okay, if you go to the 4-hour chart, so weekly chart is still bearish. Okay, weekly chart, let me go back weekly chart. Weekly chart where we are right now is actually a potential lower high area whereby bears will push it down again. Bears will push it down again. Okay, so this area, be careful. I thought it would happen around the 1200, but I was wrong. It pushed higher. But what I think it might happen is that it might make at least another push, at least maybe back to the 11600 level before it decides what it wants to do. Because it can either go all the way down or it can stall at the support level here and then the bulls come back in to push it higher. Okay? But this level here, around the 1220, if you go down to the 4-hour chart, you can see that it's a bit more toppish here. See the 4-hour chart? So the intraday trade plan is you might be able to trade within this support resistance zone. Okay, just take note that there is a support trend line somewhere here. Just adjust it a bit. Let me just delete this so you can see clearly. Okay, there's a support trend line here. So intraday kind of trade plan is 1220 resistance, possible that it might come back down to support trend line at around 1205 or so. Okay, if not, most probably consolidate around this area for the next few weeks or so. Just be a bit patient. But again, which time frame you're looking at, what trade you're planning, very important. Okay, because you look at daily chart is a bit more mixed to me, so I'm willing to just trade in between this support and resistance zone. Okay, but weekly is bearish. So for a weekly trader, for long-term traders, they might actually plan shorts from here. Okay, let's go. Any other questions? Okay, if not, I've exceeded my time as usual. Now, again, all these recordings, all this webinar will be recorded and uploaded. I strongly urge you, if you want to review what I covered in terms of price action, go look for that webinar in November whereby I did a lot of theory stuff. And again, I'll do a review in the beginning of every webinar on what I covered previously so that I can go through the top process and the trade plan. Okay, if not, the next webinar will be quite a while. The next one will be on 21st February because the nation calls. Okay, I got to go back for reservists. So the next one will be in February 21st. Okay, but if not, watch the recordings and try to understand price action so that we can discuss a bit more in depth for the next webinar. Okay, if not, thank you so much for coming by. Have a good night, everyone, and always remember to plan the trade and trade the plan. Take care. Cheers.